Joining me from Tudor, Pickering, Holt is Martin Houston, Chairman of TPH International, Maynard Holt, Co-President, Head of E&P Investment Banking. Good to have you both here.
Good to be here.
One of your claims to fame, Martin, is that you were formerly COO of BG, which of course just got acquired by Shell. What's your takeaway kind of now on the outside looking at that deal?
Well, I think the remarkable thing about it is that it was transacted at a price above today's price and in terms of the short-term expectations, and in doing so still created a winning outcome for both sets of shareholders, a really winning outcome in fact. I mean, the BG shareholders got £5 a share uplift immediately. I mean, clearly the deal closes in 2016, and for Shell there's enormous strategic fit of new assets, plugging gaps in their portfolio and turning them into a really, really big global gas player.
Maynard, is that deal the tip of the iceberg, the exception to the rule? And if you could also comment on assets being going for premium valuation in future M&A deals, will we see that?
Sure. You know, in our business right now, it's very difficult to do a cash transaction. Meaning that any given buyer looks at the price of oil and says, well, maybe I can give you a little bit more than that, but that seems to be the current price of oil. And any given seller is saying, well, not too long ago it was a lot better than that, and maybe in the not too distant future it'll be back to those levels or something better than it is today. So it's hard to find buyers and sellers who can agree on a cash transaction. So that's one comment. You asked about Shell BG being the wave, the first step in a wave of a bunch of mergers. It's very case specific, obviously. I don't mean to give you a glib answer, but I was with a CEO this morning, a U.S. executive, and he said, they don't call us independents for nothing. The reason we are independents is we like doing our own thing, we like making the decisions, we don't like to be part of bigger organizations. And so in the M&A business, you're just going to have to look hard at where would things actually make sense? Where would the company actually be better? The good thing about this downturn for the M&A business is it has reminded us that bigger can be better. For a long time, we lived in a world where bigger wasn't better. But that doesn't mean there's going to be just a whole onslaught of corporate M&A. Corporate M&A is hard. You got to integrate. You got to make everybody work together. I think Shell BG, Martin's got it right, how those two portfolios fit together. And so I don't think it's the tip. It doesn't mean we won't see some good M&A as the year plays out, but I think that was a unique situation, not the beginning of a huge wave of M&A.
Martin, how are those cultures going to work?
Well, they're very different, and everybody knows that. BG was I would say, a vibrant, quite independent, commercially quick, fast decision making, quite friendly environments. Shell is much bigger. It's got a longer corporate history. Things are done in a certain way. It's much bigger, so things are transacted at a different pace. I think the way accountability is devolved is different. So look, I think there are some very, very big differences. But as I've said to Maynard and his colleagues, what will be important in my view for Shell is to really figure out the good bits of BG, where there are pockets of excellence which are not measured as assets or tangible pieces of value, because the embedded value in BG is its people and the way it does things, and some of that secret sauce will need to be saved if Shell is going to realize the full valuation of what they've bought.
Do people result in a premium valuation when deals are made, Maynard?
There's no question that behind the scenes, a lot of consideration is given to who am I getting, and in some instances, I think so. There have been deals like that, but every company is different. The thing that's interesting though is you usually don't find companies that have average management and good assets, or great management and really poor assets, because over time great management ends up creating a great portfolio. So the attractive companies, now they trade better, so you got to pay more, but the attractive companies usually have a good collection of not only assets but people. And so I think the M&A business, if investors could do anything, that would really help all of us, and our firm should lead the way with some analytics. But looking at corporate M&A after it happens, a year, 2, 3 years, and then examining was it a good deal, that would be great for all of us, because that's where the battle is won and lost, not on the day when it's announced.
Maynard, Holt, Martin, Houston, thank you so much for your time.
Thank you.
Thanks, Rhonda.